You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Okay, ladies and gentlemen, today we have Ola Dantis on the show. He is the founder and CEO of Dwelling, a multifamily syndication firm. They have successfully syndicated and sourced over $40 million worth of deals. Ola also has a strong Instagram presence with over 50,000 followers. We're going to have to dig into that and see how he's doing that for sure. He has recently closed on a 160 unit deal in Texas. It was worth $11.5 million, and he's currently under contract on a 100+ unit deal in Texas. Ola, man, thank you for coming on the show, man. How you doing?
No, Willie, it's been an absolute pleasure. Thank you so much for having me on your show.
Yes, sir. Yes, sir. So, man, tell us a little bit about yourself.
Yeah, sure. I mean, where do I start? So I was born in Nigeria. I like to say that, put that right out there. Lived in the UK for a bit and now living in the United States. Got to the United States about 5 years, about 5 or 6 years ago now. And, started our company Dwelling. If you guys are watching this on the video Dwelling, you can check us out. We've obviously been doing a lot before, closing on 160 units, and we actually have another 100+ unit on the contract in a very interesting market in Texas as well. And we're going to be looking on closing on another deal actually that we've actually got on the wraps. We're going to be putting that on the contract. I'm also in Texas. So quite a lot going on in our business right now. I don't know. I don't know where I should start, but I think I have a really nice story I like to tell folks, because as you make that introduction, somebody might be in the gym or in their car and they're thinking, wow, who is this guy? He's got a weird name. He's closing, like, how did this all happen? So I kind of like to give some context, to that conversation. So people are not feeling like, well, I don't know, this guy just seems like is, up there. That's not true. My wife and I got here, like I said, and we had, pretty good jobs. We were kind of living the American dream-ish. We had a luxury apartment in a place called Columbia, Maryland. Things were pretty fine. I mean, nothing to really complain about. But I constantly had this void in me that, is this all there is to life? Like, go to work, come back home, eat, sleep, go to work, come back home, traffic, eat, go to work, come back. I mean, it was pretty predictive, right? Yeah. And I was just looking for something to, kind of give me a little bit more meaning. And, I didn't really know what that was at the time. And I kind of, my heart kind of was tugged constantly, right? And a friend of mine called me and said, hey, Ola, I'm going to Dubai. I'm going to meet some investors, but I also want you to come with me and kind of help me with my business that I'm starting, that I'm working on, sorry. And I just kind of need you to help me out. So, I did what every smart man does. I prayed about it. And I asked my wife, and of course my wife was like, why are you going all the way there to Dubai? Why don't you guys try something called FaceTime, Zoom, Skype, or video calling? Have you guys heard of that, that tool? Or are you guys living in 1987 or something? But I was like, hey, maybe if I do go on this trip and I actually learn something cool that may actually help us. So kind of went back and forth with my wife. So long story short, I was actually on the plane to Dubai, got to Dubai. I mean, obviously a lot of people think of Dubai as like, you're riding around in a Ferrari limousine or quad biking in the desert. None of that. We were just in a hotel room for 3 days straight, just kind of masterminding on my friend's business. And really kind of helping me kind of restructure his business and kind of rethink strategy and kind of get his competitive edge. So we were kind of doing that. And in that process, his business is a real estate investment business in the UK, in London. And I kind of started thinking like, wait, this is kind of cool. Like, wow, this guy is doing this real estate thing. Maybe I can, do this back home in America.
Right.
I like to take a pause here, right? Because, some people might still be thinking, well, what's all of this about? I'm really huge on mindset, right? And as we're all kind of going about our lives, we all think success is this grandiose event where everybody's clapping for you and cheering you on as you're walking up the stage to get your Grammy or BET or whatever the heck it is, but that's not how success really happens, right? Success is kind of this almost, if you don't pay attention, unnoticeable events sometimes, right, in your life. And for me, this was one of those, right? Because I had two options, right? When I got that call, I could have said, no, I'm not doing that. No, I'm just going to stay where I am, going to my job, live my meek life, be a good boy, pay my rent.
Right.
Or, this is an interesting call. Maybe I could go check this out, right? And that could be the same for anybody listening to this. Somebody could have been inviting you to a real estate thing, or somebody's telling you about this new business, and you know that it is interesting, but something at the back of your mind is like, just watch TV. Come on, just watch a bit on Netflix. Right. The football is on. The football is on the Sunday. Grab some wings, get some beer, and be in front of the TV, or go to that mastermind or that meetup, right?
That's right.
So that's why I tell this story. In any case, I was on the plane back home and I was like, oh my goodness, I have to do this when I get back. I mean, don't forget, I had this void I've been trying to fill, right? So got back home to the US and I kind of went on this Googling escapade, like what is real estate investing, real estate investor, just kind of, really started Googling. And this one site kept coming up. Bigger pockets. I was like, wow, these guys are everywhere. Like, let me check them out. So obviously I went on Bigger Pockets, got on the podcast. I was listening to all the podcasts and every guest, right? And this is all part of the story, right? As you kind of starting your journey, pay attention. Don't just kind of start your journey almost like mindlessly, right? Make sure you're really paying attention as you're going through the journey. And that's kind of what I was doing, right? Every guest kept saying Rich Dad Poor Dad. I'm like, well, where is this Rich Dad? What is this Rich Dad Poor Dad book? So ordered it on Amazon, got it delivered, read that book. And the way I describe it is my brain got an uppercut. I'm like, oh my God, like this guy stole my idea, right? Like this is everything I've been trying to tell myself. But this guy put it in the book, right? That's the old go to work, come back home, be a good boy, pay your rent, pay your taxes. This is what I've been trying to articulate. And this guy has it down to a T. He wrote this book in the 90s or whatever. I can't remember when he first wrote that book. So that kind of started the journey for us. And, kind of shortly thereafter, we bought our first property, right? Which was a duplex in a Class A area in Baltimore, Maryland. So for us, that was kind of like, oh my God, I remember the first rent check that we got. Right? We bought the property and I was like, oh my goodness, like somebody's actually paying us money. No way. It's impossible. Who does that? Like you actually gave us money. So that happened and I was like, oh my goodness, like this was really shocking for us because we were the one paying the rent, but now somebody was paying us. Again, we're paying attention, right? Don't be mindless about it, right? Pay attention.
Now, real quick question. On that first one you purchased, was that did you move in one side and rent out the other, or was it just a straightforward duplex? You rented out both sides?
Good question. So we bought it with the bottom unit vacant. There were two tenants upstairs, actually. So when we bought it, we did some work to it. So we moved into the bottom part, and we had the tenants upstairs kind of paying most of the mortgage for us.
That's right.
So So my wife and I were kind of at home, in our new duplex, on a fateful night, doing what lovers do, cooking, and we were kind of just talking, right? Like, and I was telling her like, hey, I've really noticed that my account is just on its own growing. Like, I'm not really doing anything different than I was doing from the year before. But this time my account was actually like money actually took its time in my account as opposed to before. It kind of comes in and goes right back out. I'm sure some folks can relate to that, right?
Oh yeah.
So and my wife was like, yeah, me too. Like, hey, like, yeah, like I have somebody as well. Like, this is actually growing. So we started thinking, oh my goodness, what if we did this one little thing that, little we thought, what if we did this like 10, 50 or 100 times like that?
Right.
Wow. I mean, then you're going to have a lot of money in your account sitting there,
Absolutely.
so that kind of, hit home for us. And you kind of started the journey into kind of, thinking of what do we really have to go for, right? So we kind of narrowed it down to, multifamily, right?
Mm-hmm.
And I listened to a podcast, I think it was Michael Blank's podcast at the time.
Yep.
And I heard a guest, Joe Fellis, and he basically said, he gave the interview, and at the end, he's like, I'm just going to give my number. Nobody's going to call anyway. And of course, I'm nobody. So I called and I was able to convince him to be my mentor, right? And obviously, he showed me everything that I now know in multifamily.
Wow,
and,
awesome.
really partnering kind of changed the course for us. And then Dwelling was born after that.
Man, that's awesome. That's awesome, man. That's a great story on how you got started, man. So you got your first bug when you bought that duplex, and it was game over after that.
Yeah, pretty much. Like, with me, I always tell anybody who listens to me, when I find something that works, I go at it. At it.
Oh yeah, man. That's the best way to be, for sure. For sure, man. If it's working, don't try to fix it.
No.
Sure. Okay, so what are you doing right now to help you find your deals?
Good question. We do a bunch of things, right? As you know, I think you connected with me on LinkedIn. You had one of my podcasts. So we, we're really out there in terms of branding. Anybody that goes on our website could tell we're very, brand conscious organization. So we're really out there, building our broker relationships, right? So brokers think of us when they see a deal that maybe matches our criteria. So they reach out to us and say, hey, I'll take a stab at this if you think it's something that might be of interest. So that really helps a ton. We also kind of reach out to owners directly through sending out direct mail, but this should not be mistaken with we buy houses. These are a little bit more sophisticated kind of outreaches that we make to owners. And we also try to speak to property managers. We've got obviously our property manager on ground in the Texas market, just to make sure that we have a pulse of the market. We use a variety of ways, and of course, we have a syndication group. So we have folks that are in that group that are looking to sell their property, or maybe their property is kind of coming towards the asset disposition phase, and we kind of start that conversation as well.
Right. Now, quick question in regards to the direct mail. Are you finding like targeted lists as far as, hey, this is at least 100 units, and they're getting ready to hit their maturity date on their loan, or the balloon payments coming up? Is that kind of how you're narrowing it down? Because I want my listeners to be able to kind of copy what you're doing.
Yes, absolutely. And typically for multifamily assets, most syndicators, and this is not obviously for all multifamily owners, but most syndicators and some institutional investors would divest or kind of move their assets between the 5 to 7 year gap. So that's also a parameter that you really want to be aware of, to make sure that hey, I want to reach out to these owners. And we use a variety of software. listsource.com is one that we use. You can kind of just grab that data, scrub it, reach out. But of course, folks need to understand this. Multifamily is a different beast to single family. So the way you write your letters are different. You obviously need to recognize that you need to deploy a ton of capital to really capture a deal, right? So you could send out a ton of direct mail, and your conversion rate could be less than 1%. So you really have to make sure that you have that financial bandwidth to really push out and deploy all these direct mails to a pretty big market. And obviously some syndicators will tell you all they do is throw that in the trash, because they want to put their asset on the market so they can get the best offer frankly.
Yeah.
So there's that too. So, but sometimes you're just looking to target the mom and pops, not the, experienced
Right.
syndicator who wants to get, the biggest offer, the best offer. So
Yeah.
it's really understanding that dynamic, and so making sure that you don't get kind of frustrated when you're not seeing the results you want to do.
Right. And you mentioned that your multifamily group that you're a part of, or your syndication group that you're a part of. So you would say that networking is also a big part of finding some good deals as well, right?
Oh, absolutely. It's really a combination of all of those things. Like
Yeah.
like I said in the beginning, I'm on LinkedIn, so brokers are seeing me, lenders are reaching out constantly. I have too many mortgage brokers that I can actually
Right.
use. So it's really
Right.
just making sure that you're out there networking, going to some events as well. I mean, there are tons of conferences that you can go to. Of
Yeah.
course, so you don't want to be a conference junkie, right? You want to be
Right.
selective, and kind of pick and choose where you want to be, and kind of who you want to affiliate yourself with. So, but yeah, those are all definite avenues that you can find deals for sure.
Right. Great points, man. I really appreciate it. So tell me, man, if you can remember back when you was first starting, what was the biggest challenge you had to face when you first jumped into the multifamily space?
So I gave a talk. I was a keynote speaker, at an event,
Hmm.
and I was, kind of talking to folks. There are really two things that really old multifamily syndication. It's finding capital and
Yep.
deals. It's what I call the CD framework. So
Right.
is that you can find capital or you can find deals. And, those were the big things for me as well. And for many people who are really looking to get into the multifamily syndication space or just in multifamily generally, right,
Right.
is am I able to raise funds? Right.
Hmm.
Am I able to find deals? So there's really just one simple answer,
Yeah.
right? However, what I've noticed being around and giving a lot of talks and speaking to a lot of people is when you tell people the answer, our brain finds a way to kind of bypass the answer
Right.
and we get back to what we think is the answer. It's a
Yeah.
fascinating way. Human beings, for the most part, we don't actually do things rationally for the most part.
Yeah.
It's fascinating. I'm a big psychology buff. I love psychology. I love
Right.
neuroscience and kind of
Right.
how the brain works.
Right.
So, but the answer anyway is partnerships, right? So
Yeah.
if you're out there and you're struggling to raise funds or
Hmm.
you're struggling to find deals, you need
Yep.
to find someone that is doing what you're trying to do
Right.
and align yourself with them, coalesce with them, figure out how you can help them with the pain points, right? How can you add value to them? On the
Right.
kind of on the extreme end of that is pay for a mentor, right?
Yeah.
I mean, at the end of the day, America is a capitalistic society, right?
Right.
Meaning is driven on capitalism, which is kind of you pay in exchange for value, right? That's kind of how the consumeristic economy is born as well. So
Yeah.
if you really want something and you really want to accelerate your growth, find a mentor that is doing what you're trying to do.
Right.
It doesn't have to be Grant Cardone. I don't know how much he charges per hour. It could be
Man,
50
I
grand or
don't want
whatever.
to know what he charges.
Yeah. So you can find someone that that you can maybe afford, and you can kind of
Right.
just learn a few more tips and tricks. And I know a lot of podcasts. I don't want to be an outlier here, but people say like there are no tricks. I disagree with that. There are
Hmm.
tricks,
Yeah.
right? That's why Samsung have been unable to do an iPhone. they
Right.
make they make Samsung phones. They don't
That's
make
right.
iPhones,
That's
right?
right.
Same goes for Coca-Cola and Pepsi.
Yeah.
So there are tricks, there are
Yeah.
trade secrets. People don't like to say, they're like, oh, there are no secrets. That's just not true.
Right.
So
Right.
you want to find out who are the players in your space,
Right.
those that you can align with, and if you have to pay them, do that.
Yeah.
Money makes the world go round. We don't like to say it because we're all
Absolutely.
afraid about talking about money. I love to talk about money because I
Right.
like money,
Right.
and there's nothing wrong with that.
That's
And
right.
I'm looking to give away most of my wealth anyway after I'm gone.
Yeah.
Gonna leave some for the kids, but I think we should start having that conversation of what money can do,
Right.
and money does help to build and create a lot of things as well
Yeah,
in the
yeah.
world. So it is
Most definitely,
important.
man. And I know there's a few people probably scratching their head right now and saying, okay, so you mean to tell me I can get started if I can find somebody to partner with? So the next question that's going to come after that is like, how do they partner with somebody as far as do they give up equity in a deal, or if they bring in capital, how much equity can they get of the deal? Like, if you can, just break that down real quick for the listeners.
Yeah, I mean, now we're kind of like venturing a little bit into like, SEC securities law.
Yeah.
So I have to be very careful what I say,
Right. I mean, just a rule of thumb. Don't, no specifics, just like a rule of
okay.
thumb of
Yeah.
what you
Just a
see.
rule of thumb is, essentially you can basically you can help bring capital to a deal, right?
Yeah.
That's a very vague statement. And you basically get a slice of the GP portion, and
Right.
just kind of explain that a little bit. So in a syndication deal, you'd have a general partnership, which is essentially the sponsor team. Those are
Mm-hmm.
those are the people that are actually going to manage the asset on a day-to-day basis,
Right.
right? And then you have the LP side, which are the limited partners in the company that is formed to buy the asset.
Right.
So the limited partners do not engage in a day-to-day management of the asset, or any kind of they're really hands off. They just say, here's my money, give me my check every quarter or
Right.
every month, whatever the disbursement schedule is.
Right.
Now, on the GP side, the general partnership side, the sponsor team, you can be a part of that, right? And you can help raise funds using your network, family and friends, or whatever it is, depending on the structure of the deal. Like I said,
Yeah.
I'm not a lawyer in any way,
Right.
and I'm not making any, any statements or any legal statements here. Just
Absolutely.
kind of like, you go do your own research, always speak with an attorney.
Right.
But yeah, that's kind of how that could work.
Yeah.
Is you find a partner. Typically, and there is a subset of people and investors, and I'm starting to see that the more I go out on the road and speak to people.
Mm-hmm.
Some people really want to do this by themselves,
Right.
which is not really the right way to do it, actually, because you can really never do it by yourself, right?
Yeah.
Even the main guys, of the syndication game, the Grant
Right.
Cardones of the world, they have a big team. You can't even
Yeah.
imagine.
Yeah.
So if you're trying to start out and be a Grant Cardone without the team, you won't get far.
Yeah.
So if you want to do it by yourself, then pay the big bucks, coalesce with a mentor so they can show you everything, and then maybe you can raise $1 million by yourself.
Yeah.
So find someone that can teach you the game. Go raise that $1 million and start employing people and partner with others, right?
Right.
There might be others who are just like kind of maybe just looking to raise money. Now you gotta be careful with that, right? In terms of like raising money, you have to make sure you understand the laws so you don't end up in jail. We don't want that.
Nah,
So make sure you understand that and how that process works. And it also depends on the structure, like I said, of the deal. If it's a 506B, 506C, there are all types of different ways that folks should go research themselves, so they have a good understanding and not just listen to somebody on a podcast.
Right.
So I think that's kind of a good way to go about it.
Yeah. Those are some good points, man. So as far as the markets that you're looking at, I mean, right, you closed a deal in Houston, Texas, and how did you choose that market, and are you looking for any other markets, or just kind of elaborate on your market selection and how you go into markets looking into them?
Yeah, so there definitely a lot that goes into kind of selecting the market. Of course, we want to be in the path of progress. We want to be in a market that there is, more immigration into that market than emigration out of that market. We want to look at what the job situations are. We also want to make sure that in the market that we're looking, it's not just a single employer market, right? Where, you have just one company kind of, taking most of the, providing most of the jobs. We want to make sure that's not the kind of market we're in.
Yeah.
We also want to kind of make sure that we have a strong, renter to ownership ratio, right? And we look at a bunch of metrics to make sure that population growth is at where it should be. We also look at that year over year just to make sure that it's trending in the right direction and not going the opposite direction. So we look at all those things, but we also look for kind of like what I call underdog markets,
Mm-hmm.
right? When you think of Texas, a lot of investors are very focused on the DFW area.
Right.
And
Right.
I remember going to Dallas and I looked at a few apartment buildings and I toured a few and I was like, oh my goodness, this market is literally on fire.
Yeah.
And just for timeline context, this was, I think, around June of this year,
Okay.
2019.
Yep.
So I was like, oh my goodness, like this place is really on fire. So we
Mm-hmm.
look for the underdog markets that people are not really looking at,
Yeah.
but there's some growth there. So that's kind of how we take a look at it. And of course, we also look at markets that our property managers can actually, cover, right? We
Yeah.
don't want to be too spread out thin. So that
Right.
kind of helps us to kind of keep things in kind of our proximity as well within the Texas
Right.
submarket.
Right.
So now out of Texas as well, we really like Jacksonville. That's a market that a lot of people are starting to, look into and talk about.
Yeah.
Florida is a great market. I mean, that was, one of the first cities that I came to in America. It's just a
Right.
beautiful, beautiful place. There's a lot
Absolutely.
of growth as well in Florida, and there always has been due to the kind of increased movement of seniors into that market as they
Right.
retire. So,
Right.
and
Right.
that's not necessarily a bad thing. People think, well, the jobs might not be so much there, but you have the retirees, and they have some spending,
Yeah.
power. To be honest.
Yeah, yeah, for sure, for sure. And those are some great points, man. Definitely the path to progress. I mean, it just shows you that there's money being spent in the economy, so that's always a plus. And you made some great points there for sure. So as far as when you're looking at a market, you say, okay, this is definitely a market we want to be in. What's like the ideal deal size? Like, is it 100 units? 200 units? Like, what do you look for there?
Yeah, so for us right now, we're looking, between kind of 50 to 150.
Mm-hmm.
With me, with some of my other partners, that could go up to 250,
Yeah.
right? So it kind of really depends. For us, though, yeah, the unit count is a big one, but I
Yeah.
think more importantly, it's really, is there value add in this deal,
Right.
or is there some meat left on the bone?
Yeah.
Right? Can we still go in and actually get something, really force appreciate this asset? So for us, that's kind of like what we're looking for. Or,
Yeah.
is there a story? Is it like a mom and pop and they've owned it since they built it in the 80s or 90s
Yeah.
and they've never sold?
Right.
And they're not using any management software. They're not using a professional management company.
Right.
So I think all of that for us those are things that we can spot pretty quickly just
Yeah.
from taking a look at the OM from the broker, or just speaking to the broker and just asking really open-ended questions.
Yeah.
And we know
Yeah.
that this is something that we can easily go in, turn around, first appreciate, kind of reposition that asset,
Right.
rebranding at some point as well, and kind
Right.
of start to pay our investors.
Okay. Good. Good. That's good to know. Now, when you're underwriting a deal, what are some red flags you see that makes you say, "Yeah, I'm going to pass"? Like, what are those things that kind of jump off the page to you?
Yeah, so that's a great question. So we typically, underwrite a variety of ways because we have so many deals coming across our desk.
Mm-hmm.
So, there are some certain things that I personally do. I would take like 55% of all income,
Yeah.
right? And I would use that to determine what the OpEx, which is the operating expenses, is.
Yeah.
And that gives me, pretty much, I mean, I would use a pretty robust spreadsheet.
Yeah.
So when I see that I use that number, so that's 55% of the EGI, which is effective gross income,
Yeah.
and I see that the numbers don't pencil out. I see that my debt service coverage ratio is less than 1.25. I don't even look any further. So
Right.
that's one of the things I look at. I also really like to look at something a little bit differently, which is kind of, if an apartment building has a typically or historically low um, occupancy, I
Mm-hmm.
try to make an hypothesis of what is the market saying, right? So I look at that particular zip code and I basically make sure that what is the number of renters in this particular zip code, because that could be contributing to the historic occupancy numbers. So I look
Yeah.
at some of those things, but kind of, I think the main one for me is really the making sure that I'm using the right number for our OpEx,
Right. 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 Yeah.
regardless of what the OM is telling us. We
Yeah,
never believe that stuff.
The broker definitely want to sell, so they're gonna spruce all those numbers up for you. Sure. Okay, man. And now, as far as the people that's just jumping into this game, man, everybody's talking about syndication, so everybody's just jumping in. What is the biggest rookie mistake you're seeing people make right now?
Trying to do it all by themselves. I'm kind of going into the mindset waters here, but trying to, like people think like I can do all this by myself. I got this. You know how smart I am? I can come in and be the next Grant Cardone.
Right.
And they do that for like 6 months and they just go back to their day job because it's too hard.
Yeah.
So that's the biggest rookie mistake. You, for me personally, what I always tell folks is understand that there's a mindset phase. I mean, why are all these guys talking about this stuff on Instagram? Anybody that is a millennial trying to do like syndication and you have Instagram, why are they like charging you guys $1,000 to come to their conferences? And in the conferences, there's fire going off. There's like stage. There's like, you can do this. Why are they doing that? If that's not a big part of being a successful entrepreneur, like in our world now with the tsunami of, with the information tsunami and the data overload, you can learn to be a brain surgeon by watching YouTube videos. You could. Now, obviously, nobody's going to let you operate on them. But my point is, the information is there. So it's not like we're starving of information. The information is there. But can you combine the information with the state of your mind, with all your preconceived notions that you've carried with you all your life? Right? Can you combine all of that to be a successful person? That's the most important thing. I mentioned this, at my event. I think I read something that I don't even follow basketball as much, but I heard LeBron James would get to the court before all his other mates and he'll be practicing his throws. Why? He's already the best. Why is he doing that?
Right. I mean, you got to always be sharpening your tool, man. And my thing is just surrounding myself with people that's trying to do what I want to do. And if you do that, man, they're going to keep you motivated. It's going to keep you going in the right direction. So that's the way to go after it, man. So let's go ahead and segue into the next part of the show. It's going to be a deal deep dive. Let's talk about a deal you've recently done, and let's try to figure out why did you choose the deal, and what did it look like, and what's the play for it?
Yeah, I mean, I would have probably preferred to talk about a deal that everyone can relate to, because I remember listening to podcasts not long ago, and like people are talking about like big number deals, and I'm just like, it's like hard to relate to. So let's talk about the duplex, because I feel like people can connect. I mean, I can talk about another deal too after that, but let's talk about that because I feel like we can connect with that, and it's closer to home and it's not intimidating. Right? And anybody can do this. Like if you if you're living in America today, like you can do this. So let's talk about that.
Okay,
so I think it's gonna be more applicable to people. So we bought the duplex for $240,000, and we spent between 20 to 40K into that duplex. So we kind of went in, we changed the flooring. We just kind of put like flooring on top of what we already had. We took out pretty much the whole bathroom. We put in some floating, cabinetry from like IKEA. Nothing pretty, fantastic there. We, changed we had like an iron cast bathtub. We took that out, put like standing shower. Looked pretty cool and modern. We obviously painted it, that new gray finish everybody's using now. We did that. And, 18 months later, that property appraised for $375.
Wow.
So, that's a pretty good one. And that's just from like, if you think about it, I mean, I did a little bit of work, but I didn't really do much, right? So that makes you think like, wow, this real estate thing is real, no pun intended, but it just really, really makes you think like, wow, if I could just, like, everybody wants to be fancy. everybody wants to be fancy. I don't bother myself with being fancy. Like if I could do like that kind of my project like 20
Yeah.
times, I probably could too. Like
Right.
not everybody has to be like Grant Cardone. In fact, I don't want to be Grant Cardone. I've been to meet sellers, landlords,
Yep.
and I've met them in front of their property, and they're like in shorts on a summer day. You would
Right.
literally walk past the guy. He obviously doesn't have an Instagram account. He probably
Yeah.
still faxes, and he's got assets of like $10 million,
Right.
and you
Right.
wouldn't even know.
Right.
So I like to say this because everybody wants to do this, maybe because they're thinking like, oh, it's one particular thing, but no, all you're trying to do is for most people to maybe quit your job,
Yep.
right, or get money to work harder for you. So
Yep.
there's no prerequisite, there's no midpoint of being fancy. You're just
Right.
trying to figure out how can I make sure I get 10K or 5K into my account every month, regardless. That's what you're trying to achieve. I'm not trying. Yes, for people like me now, with our company dwelling, yeah, you have to be out there, so you put your name out there. But for the most part, you're just trying to like earn cash every month without killing yourself, basically.
That's right.
You know,
financial freedom. That's what
Correct.
you're talking about. Yeah.
Correct.
And you're right, man. If you could just get enough passive income coming in to cover your living expenses, then you're free. I mean, you really are free at that point, so you can do what you want to do, and you've chosen to really jump into the syndication game and go that route, which is definitely a good way to go. So now you said it appraised at 375. Did you guys refi and take that money and invest into some more deals, or what did you do after that?
We're actually looking at that at this point, and we're probably going to be we're looking at some options. I'm at this point in my life now, I'm really like careful when it comes to refining so quickly. So I'm, of course, like making sure where's the market right now, but we are looking at that actually. We are looking at that.
Oh, cool. Good deal, man. Thinking about that burst strategy. That's what I was thinking about.
Yeah.
Yeah, good deal, man. Okay, so here we're going to go to the last part of the show, man. It's the lightning round. So I got 5 questions here. Let's jump in it.
Let's do it.
Okay, so what's the best advice you've been given?
Best advice I've been given is, so let's break it down real quickly. This is a lightning round, so I'll be quick.
Yeah.
If you're trying to do like just general real estate investing, like maybe buying old rentals, really understand mindset. Really understand mindset. On the multifamily side, if you're trying to go big into commercial, partner up.
Yeah, gotcha. What's the best book you've read this year?
Oh man, that is such a great question. I think I've gone through. I wish I could bring my list up here. I think I go through about 3 books a month. So basically, I read a ton. Yes, I read a ton. One book I really like is called Meditations by Marcus Aurelius. Great book, Meditations. Nothing to do with meditation, by the way.
Oh, wow. I'm going to check it out then.
Yep.
What are some rituals you're doing right now to make you a better person or investor?
Yeah, I'm huge on this. So I have a morning routine that I stick to. So I get up. I don't have an alarm anymore. I get up, early, pretty much before the world wakes up. I do business in the UK, not like real like business, but I speak to people, like, I talk to my partners there, like, so I wake up early-ish. So 4 or 5 a.m. is kind of my goal.
Right.
And then I would meditate, and then I would drink a bottle of water, and I would drink Chinese oolong tea. And then I would try to maybe get some walk in there, like a brisk walk for 3 miles, either in the gym when it's cold outside, or around the park. And then when I get back, I'll make my shake with organic wheatgrass.
Right.
That's kind of to alkalize my body from the acidic night.
Yep.
And for the most part now, I used to kind of write my goals down every morning. I don't do that. I just kind of write down what I have to do in the day. Yeah. And I kind of take my way through it. Even though I'm like against using pen and paper, but it's just kind of like right there, like this is what I have to finish today. And it's kind of been helping me a ton. I have other digital assets that I use for that, for my goals, but I write it down.
Okay, cool. Good deal. What is one thing you're doing right now to help you improve your business?
That is a fantastic question. What am I doing right now to improve my business? I think the main one for us is free events.
Yeah.
Free events, right? Because, I mean, like I said, America is a capitalistic society, so
Right.
there has to be a trade, right? And people don't really value what they get for free. That's just
Right.
how we are. We're not bad people. That's just how the world is.
Right.
But what's really up in our business now is really just offering like a free event. So we have one coming up next week in Chevy Chase, Maryland,
Mm-hmm.
and we're just going to be like teaching people about passive investing and about real estate investing, specifically house hacking and commercial multifamily investing. So
Yeah.
I think for us, that's kind of what's been helping us kind of get our name out there and just to help other people as well. Add value.
Right. Oh, that's great, man. That's great. Now, last question here. If you can give your younger self one tip getting started in investing, what would you tell your younger self?
Just keep buying multifamily. like
Yeah.
if you're mistakenly listening to this podcast and you're like 18 or 21, and you care about the future, you're not just sitting down playing Call of Duty all day like I was when I was 21.
Right.
Go buy some real estate. I don't
Right.
even care if it's like single family, doesn't matter. Like just start buying real estate.
Yeah. Great, man. Well, hey, Ola, tell my listeners how they can get in touch with you.
Yeah. So the best way is, maybe find me on Instagram, Ola Dantis. You can't miss me. The only one in the world. OLA, it's my first name, and then last name is Dantis. Reach out to me. LinkedIn, Instagram, Facebook. I'm like ubiquitous on the internet. Also, you can go to investwithola.com. That's investwithola.com. So investwithola.com. That would basically take you directly to the dwelling site.
All right. Appreciate it, Ola, man. And thank you for coming on the show, and looking forward to connecting with you.
Thank you so much, Willie. I appreciate you.
All right. Now.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.